Hello and welcome to the latest Moneymakers Investment Trust podcast with me, Jonathan Davis. A reminder that for regulatory reasons, nothing you hear today, however stimulating and insightful, should be regarded as constituting individual investment advice or a specific stock recommendation. Them's the rules we have to work with. In this segment, I talked to Edward Cartwright, who is the CEO of Arcus Investment Management, a firm that specializes in Japanese equities. So tell me, we put a proposition to the board of Baillie Gifford Shin Nippon last year when the board said it was looking at options for the future of that trust. Perhaps you could just tell us why you did that and what the response you got from the company was.
Thank you, Jonathan. Yes, we first engaged with the board back in 2024, actually. One of our investors, who's been a long-standing investor with us, had some shares in the trust and brought it to my attention. I must confess, I looked at it before. And we ourselves run a Japan smaller companies portfolio. It's about $250 million portfolio. We've been running it for 24 years now. Anyway, I duly, at his suggestion, went and looked at the performance. I looked at what has happened to the portfolio, both from a position and performance perspective over the last while, and was pretty shocked and surprised by what I found. So much so that I then went and did a bit more analysis and looked at it. And obviously, the disparity between the performance of it, and not just us, but the peers in the marketplace, was dramatic and intrigued me. So I contacted the chairman, who was extremely affable, charming, and gave us good time. And we had a good conversation, so much so that later in, I think, September time, he came to visit us and just had a chat, and we introduced ourselves and we left it there. And he made it very clear at the time that at the moment shareholders were unhappy, but things would continue as they were, but that may not necessarily remain the case forever. And then, of course, as you rightly point out, during the half-year results, I think September of 25, he made this statement in the half-year results that all options would now be considered. And I took that as a moment that we should re-engage, because this is something that we do. It's our bread and butter, managing portfolios in this space. I like to think we do it well. Our long-term track record is, I believe, very good. And anyway, we duly approached the chairman again, and he agreed that this was the time that the board should engage with us more formally. We had a meeting in October, which a couple of members of the board and the house broker, Winterflood, came to visit us. We spent a couple of hours going through our investment process, our long-term track record, the nuances of what we do and how we do it, and also how we would propose to manage the trust if we were given the opportunity, not in terms of the portfolio as much as the mechanics of the trust and some of its shortcomings as I see them at the moment. And we gave a detailed presentation. So it was very saddening for us that on the 9th of December, I think it was, when the announcements were made as to the board's proposals for the vote that I think is going through in February, we had heard nothing. We had no feedback to those meetings, which surprised us, because I'd left the meeting with the chairman and board member thinking that this was something that what we were told was being taken very seriously. So not to hear anything was sad.
So that was disappointing, obviously, and you felt that you should at least have been notified of the result and the reasons that they had decided not to take up your interest in the management of the trust. They have since announced a tender offer, which is, I think, designed to do something for the shareholders. But what are your thoughts about that? How do you think that will have gone down with the shareholders in the trust? The board would have said that they consulted widely and talked to a number of shareholders. So presumably they believe that they will have sufficient support to do what they're proposing to do, which is carry on with Baillie Gifford as the manager.
The board definitely did consult with the main shareholders. The shareholder register is quite a steep pyramid. At the top end, there are some specialists in the space, investors who, I suppose, are value investors in the closed-end investment company space. And they were certainly consulted, I'm sure of that. And I think it's hard to reconcile a group of different views to what should happen in a difficult situation like this. You've commented on this in your podcast, which I've listened to in the past with Andrew Hattie. So I'm aware of the general views. Then if you look, the wider tail of the shareholder register is retail. It's the large investment platforms. And I think it's quite disseminated and broad. So it's roughly, I think, about a 40-60 split between the specialist institutions and the general retail. So yes, the proposals that have been put forward, the tender that was already in place, such as the performance, it was not realistic to think that that was not going to not happen, excuse the double negative. And so the board has proposed to just pay that out, offer that 15% tender pretty much immediately, put a continuation vote in place, and then give Baillie Gifford another 5-year conditional tender, this time for 100% of the holding. And I'm not an investment trust expert in the same way that you are, Jonathan. But to me, I found it quite surprising that the board would choose to say to shareholders that they would allow Baillie Gifford another 5 years to try to resolve the problems. And if it is unsuccessful, then that could, I suppose, lead to an existential moment for the trust, because 100% tender to me reads as being pretty existential if shareholders vote with their feet, rather than look at other options, because it's not just us. There are other managers who have a long track record of producing returns in the Japan smaller company space, far superior to the current manager. And let's be frank, Japan at the moment is going through an incredible renaissance with the governance and general changes that the Tokyo Stock Exchange has put underway, both in 2022 and 2023. The sort of cherry on the top of the icing of the cake that started back when Mr. Abe was started as Prime Minister in 2012-13 and began his measures, which we widely call Abenomics. Japan's going through a renaissance. The stock market is showing that. Smaller companies are very keenly priced. I think it's an amazing opportunity for the future. And I think as the only investment trust that offers a pure play on smaller companies in Japan, it's a great shame that the board was perhaps not looking at the external options that were available to it. I can be a bit politic.
The management of the trust has had some changes. Last year, they replaced the former fund manager and promoted the deputy, Brian Lum, and appointed a second deputy portfolio manager, and say they've made some changes to the portfolio consistent with their long-term investment approach. So your argument would still be that that's not enough, basically. I think others have said that one of the issues for Baillie Gifford Shin Nippon has been its particular style of investing. As we know, Baillie Gifford are very much a growth investor, and that therefore this could be cyclical, and therefore they could be just about to see a revival. But you're not convinced by those arguments or those changes?
Well, if it is cyclical, it's a very long cycle. I mean, Russell Nomura have been producing style indices in Japan since the late 1970s. And for anybody who has access to a Bloomberg terminal or their data, if you look at the Russell Nomura Growth Index versus the Russell Nomura Value Index in Japan since the late 70s, particularly in this century, since the turn of the century, what you will see is that the performance of value has far exceeded growth. This is not the growth market that, say, the United States is. It's very different. And Japan has been a much more verdant field for value investors for a lot longer. And pleasingly, I mean, we are value investors. I mean, I won't get into specific detail about our investment strategy. That would take too long. But suffice to say that we analyze the market every morning using a multi-factor model. And a lot of those factors, what we screen for are value, but there's also growth and quality in there. But I do think that to keep hanging your hat, as the board has done, on this growth argument, I just don't get it, because decades of performance would actually suggest that unless there's some Damascene moment, that would be a very great surprise to me, that suddenly the world changes and growth up these decades suddenly becomes in vogue and value not in Japan, which would be very surprising. And if we look at the short-term, 1 year, 2 year out PE forecasts and price book numbers are for the typical companies that would comprise a portfolio in smaller Japan at the moment, it's extremely attractive. You know, ex the financials, you're still looking significantly below book value, and forward earnings of multiple-wise no more than, say, 10, and often below that, still single digit, high single digits. And that is quite something in the context of what we're seeing in stock markets around the world at the moment in terms of valuations. So it's very hard to understand this perpetual growth argument, but I understand that is Baillie Gifford's tilt. That's what they do. I respect that, and I respect Baillie Gifford as a house entirely. This has nothing to do with that. This is about the fact that I believe investors who wish to invest in this sector will want the most alpha that a manager could generate. And at the moment, they're receiving quite a lot of negative alpha for their investment in the portfolio.
Yes, there's no doubt that the performance of this trust over all recent periods has been very poor indeed. It's one of the worst performing investment trusts in the entire universe. And I dare say you'll be saying your track record is significantly superior. I think that's clear from the fund performance data. You are listening to a Moneymakers podcast. We are an independent research and publishing venture and grateful to JP Morgan Asset Management for their generous no-strings financial support, which enables us to keep the podcast free and our editorial principles intact. Each podcast episode goes live shortly after being recorded, with a weekly catch-up email notification every Saturday afternoon. Why not also try our premium weekly subscription Moneymakers newsletter, which provides a comprehensive summary of all the latest news, results and performance data from the investment trust sector, with links to the relevant stock exchange announcements if you want to go down that rabbit hole, and many other regular features including more than 170 in-depth and independent trust profiles, regular market commentary and videos, plus the editor's list of favourite funds. If you never want to miss a thing that might affect your portfolio, do please sign up today at money-makers.co. And if you follow this podcast on YouTube, please do use the subscribe and like buttons. Thank you. What do you think is going to happen when it comes to the tender offer? There's a meeting in middle of February, I think. What are you hoping actually going to happen? Do you think you could actually reverse this decision and get a look into the management of this trust, or are you just causing trouble, if I can put it sort of like that?
I certainly don't want to cause trouble. Let me be very clear. Our relationship with the chairman of the board is extremely cordial. He did ring after we hadn't heard anything, and I questioned that with the broker. He was kind enough to call me. We've been in touch, and he's a gentleman, and I think he regrets not having called us. But he's aware of our interest. We've committed not just to manage the portfolio, but also to invest in the portfolio. We don't invest in funds that we don't have significant skin in the game. Across the 3 Japanese funds that we manage at the moment, we have partner and employee capital of over $110 million of our own money invested. And in the trust, we would do the same thing. We've committed to put an initial £3 million straight in if we were awarded the mandate, and we'll increase it from there. So I think it's important to make that point and receive part of our fees in scrip. That's how much we want to be aligned for the future. But to go back to your point, Jonathan, about where we are in the cycle of the vote, etc., clearly the board has been in dialogue with the main shareholders. The main shareholders, I don't know how strong their acquiescence is to what's proposed, but in a way they kind of have to go along with it at one level. Whether the vote succeeds or fails in February is of secondary importance to the fact that this is a situation that has been poor for a long time. And if it remains the case, then I do not believe that the 5-year conditional tender that is in place will be seen out. I know there's a continuation vote, but I think it's proposed for 2028. Presumably, if the vote passes and 2026 passes and 2027 continues in the same vein as has been the case over the last few years, one has to assume the board, and through irascible shareholders most likely, if things do get passed, will really ask for a further review. And we're not going anywhere. We're going to be here. We've committed to this. We think that we can produce a superior product for investors, not just in terms of their NAV performance. There's income to consider. At the moment, the portfolio is investing in growth stocks that have very little income. At the moment, I think the dividend yield's about 0.4. Our portfolio in this space has an income, I think, about 2.4. So we'd be looking to enhance the dividend pretty quickly and significantly. We also are keen to right the issue with the unhappy shareholders. The portfolio actually, most people at the moment are growing portfolios through mergers and such like, thinking that there's a race to the top in terms of market cap. Well, the underlying stocks here are not very liquid. You can't really do that in smaller company Japan. And if this portfolio is a bit smaller, it wouldn't be a problem. In fact, it might even be easier to generate returns. So we're advocating to return about £75 million, if not slightly more, to shareholders and also pay down some debt so that the disgruntled shareholders can be somewhat eliminated. We can have a portfolio which is being managed for shareholders who are committed to being in this sector for the longer term. So that is what we proposed as part of our measures, which I think I've showed you the slides, Jonathan. So you've seen there are other measures we've advocated. That's just some headline points.
Okay, so you're publicising your contact with the board. Do you feel that you have a chance to get your message out to the retail shareholders as well? Is that part of what you're aiming to do?
Well, it's very hard because we're in the position of being the person outside the tent looking in. We don't have access to the communication measures that the board does. So this is a first contact, and you and some other people in the sector have been very kind in giving us some airtime. To go back to your previous point about, do you expect to win or lose? This is about getting a message out that a manager who has a great deal of experience in the space, who strongly feels that it can do better and has done hitherto, is very keen to invest in and commit to running this portfolio. And if the board realizes or concedes that now it finally is the time for another manager to be involved, then we're very keen to put our hand in the air, but we have no divine right to win this. I would expect there to be a beauty contest and we just be part of the beauty contest. So my suggestion to shareholders is that I would vote against this for no other reason than to make the board consider its options a bit more widely. This is maybe us trying to move things into a different direction slightly, because the status quo, I can't see it working. It hasn't worked. And it actually, when I looked at Baillie Gifford's portfolio, there was a moment in 2020, 2021, when the portfolio did extraordinarily well for a short few months, Jonathan. And looking back at the time, this is because there was a moment for growth when indeed it did have a re-rating, and quite a lot of holdings that were, say, I don't know, 35 times future next year, suddenly we're trading at 50, 60 times earnings. And it was a kind of career defining moment, because that was the time to take some profit off the top and reinvest elsewhere. But from what I can see, and I don't have all the data, it seems that this desire for growth was such that that recycling of profits didn't happen. And the portfolio is kind of, regardless of the fact it's been through different hands, which isn't ideal, it hasn't really recovered since. And I can't speak for the manager, and it'd be rude for me to do so. But guessing from outside looking in, I suspect that moment has slightly haunted the managers since. But that is pure conjecture. I can't say that with certainty.
And then just a quick one on the Japanese market and the small cap market in particular. Obviously, your track record is superior to that of Baillie Gifford Shin Nippon. But Japan is at an interesting juncture at the moment. There's an election coming up, and we had a new woman prime minister, and the Japanese bond market is seeing some quite remarkable movements by Japanese history anyway. We've seen positive inflation in Japan finally, and bond yields I think are up to around 4% now, government bond yields. So that's suggesting that there might be some turbulence in the Japanese market, but you think it's still a bullish outlook, do you, despite all that, for equities? Unusual for equities to do particularly well when bond yields are rising very fast, but perhaps there's a reason why that isn't the case.
Well, to go through the different measures. So politically, I think we're in a good place. We have a prime minister whose popularity is currently running in the ratings of about 75%, which is relatively extraordinary against recent history. It's unprecedented. But not having an overall majority, she's using that popularity to call a snap election in early February in order, I think, to sort that out. And I expect her to do so. She is the new incarnation of Abe, if you like. She is extremely pro-dovish policy and has made that pretty clear, and is wrestling with some of the bankers of importance in the country with regard to that. And I think there's a likelihood that we will see a sort of Abe Part 2 moment where there'll be acquiescence by the Bank of Japan with regards to what she advocates from a policy perspective. I could be wrong, but maybe that's part of what the bond market is reflecting at the moment. In terms of inflation, yes, if you use the general sort of American measures, if you take out food and energy, and having just come back from Japan, let me tell you that food inflation is just as ripe as it is in the UK. It's quite astonishing how it's changing there, and it hasn't done for years. But if we take that out, we finally hit 2% just now, literally in the last few weeks on official data. And so it's hard for people in this part of the world who are used to living with a situation where we're always trying to manage inflation down to a target, whereas in Japan for many years, it's been trying to manage it unsuccessfully up to target. But they finally, after decades, got to this target just now. So we're at an interesting moment, to put it mildly. From a bond market perspective, yes, there are some shock journalism moments going on where they talk about the fact that these are unprecedented highs from a yield perspective in some of the long bond data. But please remember that the very long end of the bond market in Japan didn't really exist until quite recently and was brought in to help with those institutions doing liability matching. And as a consequence of that, the 30, 40-year bonds were first issued at a time when zero interest rate policy, which, lest we forget, the Japanese have been the advocates of for much longer than the rest and kept it on for longer than most, they were launched in the midst of that. So, of course, the yield data is new highs, high, because it didn't exist before that. If we look at the 10-year bond and go back to the data, which I showed at a meeting yesterday, just going back to the 80s and 90s, the 10-year was trading up at 7. Now, I'm not saying that would be good for the economy. It would clearly not be good for equities. But we have to think about historic data in the context where we were for markets that traded with real liquidity for a long time in the bond market. And I think to use the 30 and 40-year data, therefore, is a little bit misleading. The break-evens at the moment in the bond market are, from an international comparative perspective, tolerable. The GDP debt ratios are actually not behaving in the same way as the West in terms of their rapid growth. They are somewhat stable. And I think, therefore, in an economy which is going through huge change and which is benefiting from policies which are changing for equity holders, the payout ratios dramatically, and has done for the last 3 or 4 years. I don't think that's going to end anytime soon. Clearly, I'm biased, but I remain bullish. I think that it's hard in international context not to be pro-Japan equities within a global equity portfolio at the moment.
So that was Edward Cartwright, the CEO of Arcus Investment Management, who was seeking to take on the management of Baillie Gifford Shin Nippon, an underperforming UK-listed investment trust specialising in Japanese smaller companies.
Thank you for listening. The Moneymakers Investment Trust podcast is independently produced and edited and is freely available on YouTube, Apple Podcasts, Spotify, and other podcast channels. You can also sign up at money-makers.co to be notified of each new edition. If you want more news, analysis, interviews, and other investment trust content, don't forget to look at the Moneymakers Circle, available for a modest subscription at the website.